Hello and welcome. This is Joey. Today is our weekly review, so let's jump right to it. All right, so we're over at the web application and just looking at the dashboard. Let's go over to Robinhood and see what positions we need to start writing for. I'm focusing on just RUM and NVAX, and I believe Tilray over in ThinkOrSwim today. The other ones are smaller positions, and I've already gone through and added some covered call positions to try and execute tomorrow. But anyway, I wanted to go ahead and focus on NVAX and RUM over here. So I guess let's go ahead and try and do. Let's go ahead and do NVAX first. So NVAX, we have 300 shares over here, and we need to sell a covered call on the 300 shares that we own. However, let's jump back over here because we need to check out what our cost basis is down to. So let's jump to NVAX. So as you can see, the last price it traded at was $11. It did tank like $6 or $7 because of some bad news that came out, I believe, this past Thursday, and in after hours of all things. So it dropped significantly, and our put did get assigned for the 1650, which did pull it down from 28 to 25, so that was good. However, it's still quite a bit down from where it was, and options are not really given much, if anything, these days, or rather today. So let's look here. $25 is our target price. It's really like $25.50, and it's let's go look. All right, so we're gonna sell a call, and we're looking for $25.50, or really $25, I guess, since it's so far out of the money. All right, so 25 is 0, obviously, here, and it's gonna be 0 all the way. And matter of fact, I think the easiest thing to do is to jump over ThinkOrSwim because it has a easier time jumping further out. And as you can see, I already have this filtered down to the $25 range. So we're looking at the 25 strikes. So here we are in January, still nothing. January 20th, 2023 finally has 4 cents showing. The thing about it is I'm thinking about going ahead and doing this one. I was toying with the idea earlier of jumping out to July 21st of 2023 at 121, because that's paying obviously a significant amount of premium, putting it way out there. And then we're still going to be playing the put side, so if it does fall just a little bit lower, we're going to be still collecting premiums on the puts. I mean, heck, if it keeps on going up, that'd be great, because then we'll just collect put premiums the entire time, and we won't have to buy any more. But if we do buy more, then it'll pull the average down, so it won't be 25 anymore. It'll drop down to, who knows, 24, 23. But we can basically just follow it down and adjust and roll this covered call down lower as it gets lower. So I really don't know if I want to go ahead and do this or do this $4 one here and wait to see what it does, because then it'll just make everything else increase. And I really like the idea of not putting it too far out, because January 20th is just a month out, and we can sell puts in the meantime. I'm really kind of leaning towards this because it is, I think, a safer choice, gives us more options, and it won't be expensive to get out of if we have to get out of it. Whereas this one, to buy it back, would cost quite a bit of money. And I can always do this one later. So yeah, the safer one is this one. I'm going to go ahead and do this one. So that's January 20th, 23. And we do own 100 shares over here in Ameritrade, so we can go ahead and execute one of these, or rather place the order for one of these. So I'll go ahead and do this one. And I am noticing that it has a 19-cent spread here, so it's almost like it could possibly execute this one. So I don't know. Let's go back. 25. See, that's an 8-cent. 25, 5-cent. And that's only a couple weeks out. I don't know. And see, that has an 8-cent spread too. So it's almost like I wonder if there's just no open interest, and that's why I didn't execute. It wouldn't hurt to go ahead and just try and place these, because I do like staying at a weekly basis. just in case. So let's go ahead and just try and put an order in for this one. And we'll go ahead and try and get 8 cents as the ask. I'll go ahead and try and do 4 cents. I mean, chances are low it'll happen, but it might. And if it doesn't, we can always adjust it and keep on pushing it out until we do find one that executes. All right, so confirm and send. $4 credit. Well, it's actually going to be $3.34 because it's not. So it's not much. It's just something to get it on the board to see if we can get this to execute. And we can always roll the position to something that's making more money if we want. We're just doing this really to see if we can get this weekly premium, get some money coming in. And I'd have to do the math, and I'll probably do the math later, of what 4 cents times however many weeks it is out to that 161 or whatever. And if we did the math and the 161 would be more, then I don't know. It's kind of like an opinionated thing to determine which one you're going to do. So I'm going to go ahead and do this one because this one is highly flexible and I can easily change it later. All right, and it's for just 100 shares. We're just doing one call contract. Yep. All right, so go ahead and send this one. And now we want to jump over to Robinhood and replicate that same thing. So December 23rd, let's go ahead and come over here. We want to sell a call December 23rd, and that was for, I believe, the 25, wasn't it? Let's go ahead and place that. See if the spread is there. Yeah, that was it. So, and over here we own 300 shares, so we want to do 3 contracts. And what did we do? Did we do 4 cents over here? Where do I see that? Yeah, NVAX right here, 4 cents, I believe is what we got that order for. Actually, I can hover over this and probably see it. View order. Yeah, 4 cents is what we did. All right, so let's jump back over to Robinhood. And we want to do 0.04. Okay, and we'll go ahead and place this and see if it executes tomorrow morning. And if not, I'll just have to play with that and adjust it. But my whole point is to try and keep it as close as possible to weeklies. That way we have more flexibility of what we change. And I am going to go back after the fact and do the math and see how many weeks out that 100 plus premium is, and see if that actually would have made more sense to do. All right, so go ahead and click done here. All right, so that's NVAX. And now over here we have some, so let's see this NVAX. We should have, 3 contracts. Okay. The last one over in Robinhood is RUM of 500 shares. Again, let's go back to here, switch over to RUM to find out what our cost basis is on this. And did anything get expired? Okay, so we got 2 call contracts here that doesn't expire till Friday, so that's still in play. This one expired, and I think all of them expired worthless, so it's 767 is the last. Yep, so that one expired worthless. This call expired worthless. That call expired worthless. And this put just below, so that expired worthless as well. All right, so we have these 2 call contracts still in play. So what do we need? I'm sorry, let's come back here. So we have these 2 contracts in place. So we have 300 shares left that we need to write calls for. All right, RUM. And I know I had previously sold premiums on like the separate strike prices, and that brought in some good premium doing that. I'm going to see if I can not do that this time and see if we can still bring in some good premium. So, I mean, we're at 9, we're at 850, 9, 10, and 13. But I do have, trying to remember this, it's hard to remember off the top of your head. Pretty sure we already got 2 contracts in play, right? For RUM. Yes, we have 2 contracts, so we need 300. And I'm clicking the wrong buttons. All right. So 300 shares. We got 100 there, 200 there. All right. Okay. Let's see what this call contracts are going for. So, I mean, it stops at 9, it looks like. Yeah. So it stops giving money at 9, 850 and 8, and we have as low as 850 and 9 here. So we could theoretically do those 5s, But I'm really trying to just make this a little bit easier and consolidated. Our cost basis is 1070. Average weekly move is 128. So we're setting at 1070 cost basis. So that means we would need to be targeting like $11 if we were to just do 3 contracts straight up like that. So let's go out and see 11, go out another week, 11, still nothing. One more week, still nothing. Okay, well, here we are at a nickel way out here, and yeah, I'm gonna have to come back and play with that. I think at this point it might actually just make more sense to do one contract at the lower price where I have bought at that lower one, but I don't know. For now, I'm gonna hold tight and not do anything. I do want to go and order a put because we will be able to collect premium there. So let's jump back over to Ameritrade, go to RUM, and I don't believe I own any shares over in, yeah, there's no RUM shares over here. All right, so let's collapse all of this, and it was trading at 778, 767 last time. So let's go ahead and remove this filter. All right, and we only need to show the near the money strikes now, so we don't need all of that information on the screen. Okay, all right, so yeah, see, 750s are only trading for like 20-25 cents for the put side, so that's still pretty low premium. I'm probably ultimately going to want to just try and get out of this stock as soon as I can, because the premiums originally, and I'm pretty sure it's because the stock just came on the market, so it didn't know what the trading range was going to be. So let's go ahead and sell a put here at 750, and the range is 10 to 35 cents. So what is that? 25 cents. So half of that is like 10, 15. 15 is too much, so 10. So we should be able to get 20 cents at least out of this, I'm thinking. And so let's just do a little math. 750, 778. I don't know. If it opens the market and it starts heading down, we actually could probably get 25. If it heads back up, then we would not be able to do that, because the lower it goes, the more the premium for the put will be going up. Let's just try and get 20. Yeah. All right. So we're going to confirm and send this. Okay. So send. All right. So that's the RUM put, and that was $750 collateral. All right. And I already did the NVAX. Which one? I said I'm holding tight on the RUM, and I am doing something on NVAX, but RUM is the one I'm holding tight on. All right. So we do need to place a put for NVAX. So I kind of jumped the gun. Let's go back here. All right. So RUM, we've decided to hold off on some of the call contracts. I got to go back and reanalyze and do some more numbers later. Okay, so nothing really straightforward this time on the weekly review, which does make it quite a bit more challenging to decide what to do next. All right, so NVAX, we want to go ahead and see if we can place a put. So I got the call right here. All right, so I need to place a put. And we were setting at, say, 11. So, okay. So I'm going to go ahead and place this one, because if we buy it at 11, that'll drastically bring down our cost basis. So I am okay with that if we end up having to buy at 1100. And the cool thing about this is it can only go down to 0, right? So it's not going to keep on dropping forever. I mean, that is bad news if it goes to 0. Obviously, you'd lose everything, and that's more of a fear of the company going bankrupt. So let's do this. So we're just going to keep on riding this out. I don't think it's going to go to 0, but just throwing out the possibilities here. So the spread there, 86 to 94, that's 4, that's 8 cents. So we should be able to get 90, it looks like, if we're at the mark, which is in the middle. All right, so we're going to go and confirm and send this. So even though it's dropping, we're still being able to play these at the money puts and collect some premium. So we're still driving down our cost basis, and we'll drive it down even more if these execute. So it's not the end of the world that we have a bunch of other shares out there that we're not really able to write calls for much premium on. It's just a process, and eventually one or two things is going to happen. Eventually you'll either buy enough puts and collect enough premium and drive your cost basis down that way, or the stock price will start going back up, and you'll get closer to whatever your cost basis is, your cost basis average. So that's the two paths that it can take, other than the worst case scenario, of course, of going bankrupt. So let's go ahead and click send here. All right, so that, I believe, oh wait, nope, we got Tilray, and Tilray is a new one that it's an old one I had started up originally in Robinhood a long time ago, but I started doing again in Ameritrade, and this will be so much easier once everything gets moved over, of course, but I can't sell out of positions until it meets the criteria to roll us out correctly. Okay, so Tilray, our cost basis is $3.96, so we're looking at a $4 call that we need to look for. So we own 200 shares of Tilray, and it didn't, that's interesting, it didn't switch. Why did it not switch? That switched. Okay, whatever, interesting. Okay, so what did I say we were looking for? We're looking for a $3 or $4? We're looking for $4. Okay, so $4, and it's trading at $3.26, so $4 won't have the majority of the premium, but this is what I like about Tilray. It's a lower price stock, but it's a high volume, high option volume trading stock. So even though it's 2 strike prices out, just this week it still has premium. Even 3 strike prices up has premium, which makes this great for selling premium for cash flow. It's just a matter of finding the stocks that do this kind of thing, and the weekly trading average is 42 cents. So we're safe, I think, at doing 4, and it's still bringing in premium at that rate. So we have 200 shares, so I can do 2 of these calls. We're going to sell 2 covered calls, and the spread is 7 to 8 cents, so it would be right. That's another good thing about this. The spread's only a penny, which that makes it really nice. If you have to buy it back, you only have to spend, on average, like a penny more than you bought it for. That's when the spreads really make a big difference, if you have to buy and sell them back and forth. And since this is a high option trading, because you can tell, see the volumes are in the thousands here, so it does get traded quite a bit. All right, so we're doing 2, 7 cents. We're going to confirm this, and so the credit's going to be that. Yep. Go ahead and send this, and as usual, now I only have buying power of $227, so that is not going to be enough. I'm going to need at least 300 to do something. So if I try something, it's going to error out on me. I do have some more money coming into the account, but it won't hit until tomorrow. And when it does, I can come back in here and place the put, because we always like to play both sides as much as I can, whenever I can. So I am always pulling down the cost average, or I'm making more premium, one of the two. So let's see here, just so I have an idea of what to look forward for tomorrow. So the best I could do right now is to buy a put at 200, and right there doesn't bring in much premium. But tomorrow, if I wait, I can do this one for 10, and that'd be nice. Let's see here. Just curious if 2 would actually pull in anything. And I mean, it looks like the spread is there, so you might be able to, but there is no asks. Or, sorry, there's no bids. Yeah, still nothing going way out. So yeah, I'm better off just waiting till I get a little bit more capital in the account, and then I can just do this 3. And then I will be playing both sides. And I don't think by tomorrow that spread will change too much. I mean, unless the stock just moves quite a bit in one direction, then it might change quite a bit. But other than that, I think the majority of that extrinsic 10 cents will still be there tomorrow. Not 9 or 10 cents in either way, so it's still decent. So anyway, let me see. Is there anything else left? We've covered Tilray, NVAX, and we covered RUM. We have all those positions going. So yeah, I think that is it for this one. If you haven't already, like and subscribe. And thank you for watching. Also, if you haven't gotten your free account, go out to the website, myatmm.com, and get your free account today. I'll talk to you in the next one.